Listen, I think the whole space, the meme is really important. I mean, the best meme Bitcoin ever had was not digital gold, it's number go up, right? I mean, that's such a powerful meme, right? And people get it. And so memes are really important because these are new things and people don't know how to really place them in the mental framework. But then it's kind of a child of the internet too. So, dog with hat is like the big meme coin of the moment. And that's fine. It's kind of pure speculation and culture. It's the value of culture. But the problem is it can die so quick, the culture of one thing, and others are pervasive, like Doge. So it is really hard to do, but my God, you can make a lot of money. And in my 10% DGen portfolio.
After the much anticipated launch of spot Bitcoin ETFs, the main cryptocurrency's price dropped by 14%. Initially, Bitcoin went above $48,000, but currently, its price roams around $42,000. Unfortunately, the approval of the Bitcoin ETFs didn't bring a quick increase in market value and more money into the market. The news about Bitcoin ETF approval was not as exciting as people thought, causing a correction in the overall cryptocurrency market. But surprisingly, while Bitcoin prices went down, other cryptocurrencies stayed strong. This could be a good time to mix up your investments. Now the question is, should you put money into meme coins? Raoul, financial analyst, macroeconomist, and founder and CEO of the Real Vision Group, emphasizes the importance of meme coins in the crypto space during an interview with Anthony Pompliano. Pal views memes as essential as they represent new concepts, though people might struggle to understand and categorize them mentally. Pal acknowledges the potential for significant gains in meme coin investments, but also warns about the risks involved. He mentions that the culture around a meme can change rapidly. For instance, some meme coins might experience a quick 50x value and disappear. Caution is advised when diving into meme coin investments. As for Pal, he allocates only 10% of his portfolio to such speculative ventures. Investing all cash in meme coins can lead to significant financial losses if the market conditions change unfavorably. With that said, how about NFTs? Well, NFTs are different. Let's take a look at what Raoul Pal thinks. As we show you clips from the interview, we'd love it if you could take a moment to show your support by liking, sharing, and subscribing to our channel. Don't forget to turn on notifications so you don't miss any of our interesting videos. Feel free to join the discussion by leaving your comments below. Your engagement not only helps our channel grow, but also improves how YouTube recommends our content. I appreciate your support, and we hope you enjoy the video.
So with the new Solana compressed NFTs, and I know others have similar stuff, basically they're cheaper than printing a physical ticket. So now you're going to a baseball game, your ticket's an NFT, you can't go to the event, you can sell it instantly. Okay, you're releasing trapped capital. Hotel rooms. Another thing, we all booked hotel rooms and suddenly we have to cancel the trip. The hotel won't give you your money back. They lose out because nobody's having a glass of wine and a steak in their restaurant. You've lost out because you've lost your entire money. If it's an NFT, you could have a marketplace and you could exchange the hotel rooms. So I think it's going to release a lot of trapped capital out of ticketing, stuff like that. Outside of just the cultural stuff we can use it for. I don't see any reason why album covers from music artists, because they're free of all the IP issues of music, which is a nightmare. But the album cover art, why can't those be NFTs so Taylor Swift can both monetize it or reward people for it? So look, I think there's a lot of use cases, and NFTs really, if they're just smart contracts, well, that means all OTC options should be NFTs. So NFTs are just assets that lag. If you think of art NFTs, right, the expensive stuff, or the punk behind me, that stuff is a function of discretionary income. Much like Rolex watches have been going down, as has fine wine, as has secondhand cars, as has NFTs, punks. And I chart all of this stuff and look at them, and they just lag the economy. Because right now, markets aren't at all-time highs. People they don't want to start social signaling yet. by buying the fancy Rolex or the Punk or whatever. So it just lags. So I think we've been bottoming for a while in those assets. But I think NFTs this cycle, I think we will see, and you and I have talked about this before, uses stuff like ticketing, just scale uses of smart contracts. I think we will see that because the technology now enables it. So it doesn't have to be super expensive. We've also seen the rise of inscriptions and ordinals and that kind of stuff, which is really interesting. And right now we're just in the experimentation phase, but people will figure out, okay, what really needs to be inscribed on the Bitcoin blockchain versus what doesn't need to be, that kind of stuff. And I think it's really interesting.
Pal sees various potential use cases for NFTs beyond art, including memberships and practical applications like ticketing and hotel reservations. Pal notes that certain high-value NFTs, like rare digital artworks or collectibles such as punks, are influenced by discretionary income, akin to luxury items such as Rolex watches, fine wine, and second-hand cars. He observes that these premium digital assets typically experience a delayed response to economic highs, as individuals exercise caution in signaling affluence during economic downturns. With that said, it's smart to be patient and choose the right time to invest. In tough economic times, people might not be as interested in expensive digital items, so it's wise to be careful. According to CoinDesk, altcoins have recently been outperforming Bitcoin and Ethereum, indicating a broader investor interest in a variety of cryptocurrencies. In the last week, the total value of all cryptocurrencies has increased from $1.61 trillion to $1.74 trillion. Altcoins like Solana, Avalanche, and Internet Computer are leading this market recovery. Let's take a look at more clips of Raoul Pal as he shares his insights about the public market investing in crypto-related equities. Here, he also reflects on the evolution of Bitcoin and the gradual industry movement toward blockchain adoption by major financial institutions.
So firstly, now the ETF is out, maybe some of these things don't outperform, but some of them naturally do. Miners do, because it's the same with gold miners. Once the gold price goes up and you cover the cost of electricity, before you know it, they start compounding money. The ETF will mean some of those flows get taken away so people don't use proxies. So stuff like MicroStrategies might trade at a slight discount. But I think you're right. The market doesn't yet, because the investment banks didn't do the research on this stuff. So it all flows down from the authentication by the investment banks that flows down to the asset management firms, who then decide to allocate. And that's been thin on the ground because they've not really touched crypto. So I do think as more companies come public, I know Circle's probably the next one, there'll be a bunch of these coming public. And I think that means that the investment banks will treat it as a full sector, and then they will start advising clients. And so we will understand these things better. Maybe they all get repriced in this cycle to a better pricing strategy. When I first got into Bitcoin in 2013, this was my thesis. And here we are 10 years later, and it was the last thing to happen when I thought it was the most obvious first thing to happen. I thought the financial system was going to be first. But regulation, inertia, and fear has been the real thing. So they've waited for something bigger to be built, and now people are understanding it. And I think things like, I don't think people understand this Solana fire dancer. And again, not just picking on Solana because I'm long of it, but it's just like they're thinking that Solana's theoretical TPS is 65,000. Fire dancer takes it to 1 million. And it was built by Jump Trading. And the idea is you can therefore use blockchain for high frequency trading. So therefore it can be used for all exchanges. And if you think about the mess of FTX, we need exchanges on blockchain. We need the recorded ownership of assets. When Lehman Brothers went under, everybody's got a claim on the collateral, and there's 35 claims on the same piece of collateral. Right, this sorts it all out, automatic settlement of everything. We've seen that in DeFi. DeFi is a great experiment in showing that everything can automatically settle and contracts can resolve. So it is coming, and it feels that once you speak to Franklin Templeton, Fidelity, the people at JP Morgan, BlackRock, that they are working towards it. But there's been some setbacks as well. Australia tried to put their stock exchange on blockchain rails and gave up. There's a bunch of people who've tried and given up.
When Pal first got into Bitcoin, he quickly believed that the adoption of Bitcoin in the financial system would happen sooner, even considering it as the most obvious progression. However, regulatory challenges, inertia, and fear delayed this adoption. Despite setbacks, Pal observes a growing understanding and interest in blockchain from major financial institutions, indicating a positive trend toward broader adoption. Pal anticipates that as more companies in the crypto space go public, investment banks will begin treating it as a full sector. This, in turn, could lead to increased research, advice to clients, and a better understanding of crypto-related equities, potentially resulting in a repricing strategy in the current market cycle. Meanwhile, as altcoins currently gain popularity, there are voices of skepticism, including from prominent Bitcoin supporter Max Keiser. Notably, Keiser has criticized Solana and XRP tokens, expressing a bearish stance on their prospects. In a recent tweet, Keiser used his harsh style to label Solana's blockchain a rug pull, denouncing Sol as centralized garbage. He went further to predict that Sol would inevitably decline to virtually zero against Bitcoin. This bold assertion followed Solana's significant price drop of 26% since January 11th, falling from a peak of $107 to a low of $79.34 on January 23rd. A decline exacerbated by Bitcoin's brief surge after the SEC approved spot Bitcoin ETFs. Keiser's outspoken predictions don't stop there. Earlier in the year, he stated his prediction of Solana declining to $20, which materialized in a swift 15% drop to $96. Despite Keiser's bearish outlook, Solana has demonstrated resilience, experiencing some recovery, currently priced at around $99 as of making this video. Keiser's critical comments aren't limited to Solana. He has also been targeting XRP. In a recent post, he forecasted that the Ripple-affiliated XRP coin would crash to $0.01. Keiser's skepticism extends to his belief that Bitcoin is the only genuinely decentralized cryptocurrency created by the mysterious figure Satoshi Nakamoto, who promptly disappeared from public view after releasing BTC. Keiser contrasts this with altcoins, arguing that they are nothing more than centralized garbage since they are created by teams of IT engineers. Notably, Keiser aligns with the SEC in its legal actions against Ripple, reinforcing his stance on the regulatory challenges faced by certain altcoins. What are your thoughts regarding the recent market status? Feel free to share your thoughts in the comments below. If you found Raoul Pal and Max Keiser's insights valuable, don't miss out on more expert opinions by hitting the like button, subscribing to our channel, and turning on notifications. Stay tuned for the latest updates and analyses from the cryptocurrency world. Your active participation is the driving force behind our content creation, and we sincerely appreciate your ongoing support. Join us on this captivating journey through the ever-evolving landscape of cryptocurrencies. Thank you for tuning in, and we look forward to welcoming you back in our upcoming videos.